Hello there, this is James, and you're watching OneRoyal, and it's live. In today's program, I want to discuss how the US stocks possibly lost their number one spot. As well as that, Trump really wants us to buy American motor cars, and has the inflation problems come back again to scare the Bank of England. But before we get into all of that, don't forget these little videos are for educational purposes only, and in no way whatsoever should they be taken as financial advice. I always suggest you do your own research, do your own due diligence, and of course, know the risks at hand before entering any trade. With that out the way, let's get started. So yes, the headline I want to start with today is questioning whether or not US stocks are no longer the stocks of choice, which is a complete polar opposite to how the market was looking at US stocks last year. Because at the end of 2025, the street believed the US stock market was going to continue its exceptional rally and be the stock of choice. However, 2 months into 2025, it appears this is no longer the case. Reason to it, and we'll go through some of the reasons for it as well. Bank of America recently carried out a survey, of fund managers this month. And 34% of fund managers went to global stocks. 22% of fund managers listed gold as their investment of choice. And only 18% of fund managers went to US equities. As well as that, this survey said a few other things as well, which highlighted this. It said that 90% of investors see the US stock market overvalued. Now, that might have a fair point, because in other videos which I've done, I've covered this. The S&P 500 in particular has been driven over the last couple of years by the Max 7. And only two of the Max 7 have really been successful so far this year. The main one being Meta, which is up about 25%, but the other Max 7 are disappointed. However, it hasn't stopped the S&P from hitting an all-time high again, which we'll talk about in a minute. The other thing about this, what this survey and what recent things have looked at, is that European equities over the last month has had one of the largest 1-month increase in 25 years. That's 1 month increase of actually people investing it in 25 years. And there's a couple of things to this, okay? And if you actually look at Eurostock 500, which was in the headlines, so far this year, it's risen by more than 10%, whereas the S&P 500 has only had a gain of 4%. Now, what are the reasons for this? Well, for number one, obviously, is investors believe that the Fed will only do one rate cut this year. So that's dampened their confidence in US stocks. As well as that, German investor confidence is high. As well as that, there is expectation that, of course, we're going to see loose fiscal policies in Germany more than we are going to see in the United States. So this is why it's making something like Euro stocks and, like I say, the DAX an attractive alternative to US stocks. As well as that, recent consensus is that the US economy will now only grow by 2.2% in 2025 versus 2.8% seen in 2024. So overall confidence in the US at the moment is slightly lower. This is why we're seeing the market shift away from US stocks and going into global equities and also European equities. Let's have a quick look. Actually, let's have a quick look at where the market is at the moment. At the moment, of course, we have the S&P 500. Like I say, despite what we're talking about, S&P 500 still hit an all-time high yesterday. But if you compare that, and like I say, 4% gain for the year end, you can see it's 3.25% here. But if you have a look at the Eurostock 50, it hit all-time high 2 days ago. mainly driven by the defense stocks, which of course I've done another video on that and discussed that. Though it sold off a little bit, we are looking at more than 10% gains on Euro stocks. If we have a quick look at the DAX as well, which has performed quite well over the last couple of trading sessions, again, very extremely high. There's having a bit of a sell-off so far today, but again, that's only minor compared to how many days of gains it's had. Does it count that? 1, 2, 3, 4, 5, 6, 7, 8 daily gains. So there is signs indeed that maybe the market is looking towards European stocks as an alternative to the US stocks. And maybe it's time for the US stocks, time in the sun, to step away and have a break and let some other people be the big boys for a change. In other news, like I say, Trump 2.0 is at it again. And he really, 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 really wants us to buy US cars, because he's announced yesterday, that he plans to do 25% tariffs on automobiles, pharmaceuticals, and computer chips. And this is to start on April the 2nd. This is really mainly the focus on the European Union. And as he always said, he's always just wanted to make it fair. And for sake of argument, I think he might have a point. Because here's the thing. Okay, the European Union collects 10% duty on imported vehicles. Okay, the US, on the other hand, they only get 2.5% tariffs on imported cars. Okay, though, as another example, they charge 25% tariffs on imported pickup trucks. Now, this actually makes Detroit automakers very profitable because they focus on building pickup trucks. Okay, this is also down to a fact that called the chicken war, which is a different subject. And by all means, you can ask me about that, and I'll explain to you what the chicken war was. That goes back to the 60s. But anyway, yeah, so he may have a valid point, but of course, the EU is not going to take this sitting down, especially Germany, and they sell a mass majority of their cars to the United States, the Beamers, the Mercedes, the Audis. So again, this is, causing a little bit of uncertainty, but to be fair, the market's getting quite used to it by now. They're getting used to these threats. So, a lot of people are still sort of thinking it's a tactic to make a deal, whatever, like he did with Canada and Mexico. But anyway, that's what he said now, and that's the recent thing. We'll have to see what happens. In other news, like I mentioned at the beginning of the show, is it time for the Bank of England to start to worry about inflation again? Because UK CPI year on year was announced higher than expected at 3% versus 2.8% expected. And if you look over the last 3 months, November is 2.3, December 2.6, January 2.5, now February is 3%. So again, there was a lot of excitement, especially when the Bank of England cut rates last week, a couple of weeks ago, sorry. The Bank of England will act again and cut rates further. Now, with this inflation slowly creeping up again, are they going to be able to do that? That's the real big question. And we'll have a quick look at the cable at the moment, British pound, US dollar in a second, so we can see the impact that has slightly on the great British pound. On other news, and of course, we'll look at this again as well. I'm going to have to say this. Gold has hit an all-time high yet again. Yes, my beloved gold metal or yellow metal is performing extremely well. And I also mentioned in previous videos, I'm going to bring it up again because I did a webinar on this a couple of hours ago, and it's a real valid point. Goldman Sachs now predicts gold to hit 3,200 by the end of 2025. And UBS, changes its forecast to gold to hit 3,200 in the coming years. So, like I say, there's a lot of people believing in gold, and gold seems to keep rising. I think there's a number of reasons for it. I said this in the webinar I hosted today. Obviously, it rose today because of these tariff threats. But if you look at the market, like the S&P 500, is still performing quite well, and it's polar opposite. So if gold was really attracting the investment market like it seems to be doing, I think there's more to it, and I'll do a special on this again another time. On other news, Can I have a minute? Yes, you can, because the market is waiting for the key event today, which is the FOMC minutes due at 7 p.m. GMT. Like I always say, the market will go for this like with a fine tooth comb to try and get a hint what the Fed may do next. Again, I think, like I say, we really sort of know, especially with the last CPI reading, that they're going to sit on their hands to at least June. Anyway, let's have a quick look at the market, see, look at the cable and gold, obviously. So starting off with the British pound. Okay, it was hovering around 126. It's been holding that for a while, especially because of better GDP announced last week, came in at 0.1 minus versus negative 0.1% expected. Unemployment also came in better at only 4.4 versus 4.5 expected. But like I say, that inflation reading has sort of dampened it a little bit. It's dropped down below 26, just below 26 though, so not over the top dramatic, because obviously the market is sort of guessing, okay, yeah, Bank of England won't be able to move as much as we had hoped. Gold, we're going to have a look at gold. Like I say, currently trading at $2,935. Like I say, hit an all-time high today, just under, we're at about what, 245 or just under $250 today. So yeah, that's very much still on a potential uptrend. Let's have a quick look at the euro. A euro pretty sideways as well. And again, it's had 2 days of losses now. It's still trading around 1.04319. And let's have a quick look at S&P, see how it's opened. Okay, a little, not amazing today, but like I say, it did hit a new all-time high yesterday. So you got to cut it some slack with that. Other things coming up this week. We have, of course, US initial claims happening tomorrow. Expectation is 214,000. Friday, rounding out the week, we have the S&P Global Services PMI as well. Now, don't forget, these are indeed live shows. So if you're watching me on YouTube or Twitter or the blog, feel free to chat with me, ask me questions anytime. Or what I really do like is when you offer your opinions. Let me know what you think and your insight into what you see. I mean, when do you think gold's going to hit $3,000? Do you think we're going to see Euro Stock 50 gain even more with the momentum it's got at the moment? Is indeed the S&P 500 overvalued, like 90% of investors think? So feel free to, talk to me, chat to me, ask me questions whenever you want. If you're not watching this show, can't get my teeth in. If you're not watching this show live, by all means, leave a comment below in YouTube, maybe asking a question, something maybe you want me to cover next time around. Anywho, if there's no comments, no questions, not a problem. Don't forget, if you're watching me on YouTube, by all means, subscribe if you like. Hit the notification button so you know next time I'm going live. And give me one of these if you like the content I do. It's nice to know what I like. You like what I do. And as well as that, if you see me on Twitter, by all means, give me a like. Spread the word. Repost if you like. Or leave a comment. Again, if you have a question you want me to ask, answer next time I'm going live. Anyway, till next, excuse me, dearie me. Anyway, till next time, don't forget, these little videos are for educational purposes only, and in no way whatsoever should be taken as financial advice. I always suggest you do your own research, do your own due diligence, and of course, know the risks at hand before entering any trade. Till next time, every single one of you, trade